Jason, welcome. So, this idea of, special branded cards, and then also the way that we see this entire landscape and getting to the consumer changing. I'm wondering kind of what you're seeing happening with buy now, pay later, not just as a means of replacing credit, but also of aggregating attention and providing a new consumer experience, and how you see that affecting your business.
Yeah, thank you for having me, and thank you for your continued interest in Marqeta. So as we saw a sequential growth from Q3 to Q4 of 50%. Buy now, pay later a few years ago was not part of the consumer choice. Now we see even a study that we did, we surveyed 3,500 consumers in the US, Australia, and the UK, and 51% of them have actually used buy now, pay later. So we just see this changing landscape where consumers are looking at other types or other modalities to pay, and we believe it's here to stay, and that's very clear based on the growth we saw in the fourth quarter.
But it doesn't seem, Jason, to be just about paying. It seems to be about relationship and engagement between brands and consumers, right? And in this time where we've seen we want to call it traditional, as if Facebook has been around forever, the more traditional ways of maintaining digital engagement, of targeting, are breaking down. What do you see as the most important things that you and your customers are providing that's sort of laying the groundwork for what comes next?
Well, our customers like Affirm, Klarna, Afterpay, Zip, Sezzle, in the buy now, pay later space come to us to use virtual cards, which inserts a virtual card in the checkout flow. So it looks like you're paying with Affirm, but there's a card that flows through the checkout flow from an acquiring perspective. This is what we do every day, which is pay through different, whether online or offline, using card products. So what it does is just streamlines and brings more choice to the consumer. It allows the buy now, pay later companies to get into more and more merchants, both offline and online, and then bring that consumer choice. And again, we've seen just through the last 2 years of growth in buy now, pay later has been pretty extraordinary. And we see how this payment type is really here to stay. And it's obviously a big vertical for Marqeta based on the results of Q4.
Jason, it's fascinating to look at your sort of customer mix. Marqeta's popularity kind of began with the disruptors, companies like Square, now Block, DoorDash, others in the gig economy space, but you're increasingly doing business with traditional banks. I wonder, what is the makeup now, and where do you think the greatest opportunity lies?
Well, it's been part of our strategy. So we started off with commerce disruptors where we saw the DNA match with developers. Companies you mentioned like DoorDash, there's Instacart, Block. We then went into digital banks, tech giants, and large financial institutions. That's where actually a majority of the volume exists today around the world. And we've always thought about how do we break into that space. Now, we are in the picks and shovels business. We've seen, obviously, lots of disruptors built on top of our platform. And now we're seeing the large financial institutions really want to compete. So JP Morgan Chase, then Marcus by Goldman Sachs, and now Citi. We're launching in 40 markets using Marqeta's tokenization as a service, which is a first for the industry. And it really just allows consumers to instantly issue a card into Apple Pay, Google Pay, or Samsung Pay. Now we've seen, now that we're coming out of the pandemic, the ability to use these types of services like Apple Pay is really here to stay. And obviously Citi wants to use Marqeta's technology to take advantage of that.